The impact of inflation on your finances. Understanding the way your money works is an important part of financial health, and that includes understanding the impact of inflation. Although often dismissed as a distant economic concept, inflation has real-world implications that can affect your personal finances. From your savings to your debts, the force of inflation is a vital factor to consider. Let's delve into the impact of inflation on your finances and what you can do to mitigate these effects. Before moving forward, if you are new to our channel, don't forget to like and subscribe to our channel for future interesting videos. Unmasking the financial jargon. What is inflation? Let's play detective and demystify the financial enigma, inflation. Picture this: you walk into a movie theater today and a ticket costs you $10. Fast forward to a year later, you're back at the same theater, excited for another film. But that same ticket now costs $10.20. You've just had a taste of inflation, an economic phenomenon that gnaws at your purchasing power over time. Inflation is essentially the rise in prices of goods and services over a certain period, which means with each tick of the clock, the value of your dollar shrinks just a tad bit. Your dollar, which previously could buy you a whole candy bar, now only gets you 3/4 of it. In other words, inflation is like the invisible pickpocket stealthily reaching into your wallet and pilfering a small fraction of your money's worth. But inflation doesn't occur in a vacuum. It's fueled by numerous factors, ranging from high production costs that push up the price of goods, government debt, which often results in printing more money, national disasters which disrupt supply chains and boost prices, to international lending and global economic events. Stay tuned as we explore further the hidden effects of inflation on various aspects of your personal finances. Identifying inflation. It's more than just rising prices. Inflation is a shapeshifter, and it's crucial to identify all its guises to comprehend its full impact on your finances. Sure, it prominently manifests itself through the uptick in prices at the grocery store or your favorite coffee shop, but that's just the tip of the iceberg. Inflation has a knack for making its presence felt in other, less obvious ways. Consider wages, for instance. As inflation makes its rounds, companies may find themselves compelled to bump up salaries to keep their employees happy. This might seem like a win at first, but remember, if inflation is causing your wages to rise, it's also eroding your purchasing power, making those extra dollars less potent than they appear. The actions of our central bank also give away inflation's lurking presence. To reel in the inflation dragon, the central bank might hike up interest rates to pump the brakes on economic activity. This is done to balance out the increased spending that fuels inflation, but it also means higher borrowing costs for you and me. Lastly, let's examine consumer behavior. An unexpected surge in our collective spending can be a harbinger of inflation, especially when it outstrips supply. It's like a rock concert with more fans than tickets available. Prices are bound to skyrocket. So, inflation is a bit like the wind. You can't see it, but you can certainly see and feel its effects, from the higher price tags at the store to increased salaries and interest rates, and even in the ebb and flow of consumer spending. By recognizing these signs, you can better prepare for its impact and navigate your financial ship through the stormy waters of rising prices. But remember, every cloud has a silver lining, and in some cases, as we'll explore next, inflation can actually work to your advantage. Stay tuned. How inflation influences your savings and investments. In the game of money, inflation can play the role of a stealthy saboteur, quietly siphoning off the value of your savings and investments. Just like how a mouse nibbles away at a block of cheese, inflation nibbles away at your money's purchasing power. If the inflation rate runs faster than the interest rate on your savings, the actual value of your savings diminishes. Imagine a scenario where your bank offers an interest rate of 1% while the inflation rate runs at 2%. This means that every passing year, your savings are essentially losing 1% of their value in the race with inflation. Turning our attention to investments, it's much the same story. Picture your investments as a garden. You plant a seed, investment, nurture it with water and sunlight, capital, and wait for it to grow. However, inflation, like an insidious weed, can encroach upon your garden, choking your plant and limiting its growth. Unless your investments are yielding returns that outpace the rate of inflation, they're not truly growing. Instead, they're caught in a tug of war with inflation, and if they're not strong enough, they could end up losing ground. Let's dive a bit deeper with an example. If you've put your money into bonds that yield a return of 3%, but inflation is trudging along at 2%, then your real return is essentially just 1%. The higher the inflation rate in relation to your investment return, the less real growth you will see. Remember the old saying, money doesn't grow on trees. Well, it doesn't grow in high inflation either, at least not without some smart strategies. The key is to ensure that the growth rate of your investments consistently outpaces inflation. A financial advisor can help guide you on this journey, helping you plant the right seeds in your investment garden to ensure they grow tall and strong, well above the reach of the inflation weed. In the next section, we'll explore how, paradoxically, inflation can sometimes be the ally of those in debt. But for now, let's give our wallets a break, take a deep breath, and prepare for the next round in the fight against inflation. Why rising inflation can be a debtor's friend. It's a surprising twist in the plot, isn't it? Inflation, often the villain in our financial stories, might just be the unexpected hero for those battling the dragon of debt. Let's delve into this curious relationship. You see, as the relentless march of inflation erodes the buying power of your hard-earned dollars, it also chips away at the real value of your outstanding debt. Think of it as a seesaw. As the value of money descends, the weight of your debt simultaneously ascends, lightening your burden. Let's paint a picture to illustrate this better. You're a protagonist in a debt story with a hefty loan of $10,000 hanging over your head. You've promised to repay this at an interest rate of 3%. However, in swoops our unlikely hero, inflation, galloping at a steady pace of 2%. Now, here's where the magic happens. As inflation dilutes the value of money, it also dilutes the real interest rate on your debt. So, instead of repaying your debt at the originally agreed upon 3%, you're now effectively repaying at a real interest rate of 1%. In this strange twist, inflation morphs from a foe to a friend, playing the role of a clandestine helper, subtly reducing the pressure of your debt. It's like having a secret weapon in your financial arsenal, helping you combat debt, one inflated dollar at a time. However, it's important to note that this isn't a free pass to rack up debt. Just like any superhero, inflation can be unpredictable, and relying on it could be a risky game. Therefore, the wiser course of action is to always aim for responsible borrowing and prudent debt management. So, the next time you hear about rising inflation, remember that it's not always the villain of the piece. For those grappling with debt, it might just be wearing a superhero cape, swooping in to lighten your burden in its unique way. But before we rest on our laurels, let's turn our attention to ways to shield our finances from the effects of inflation. Stay with us as we continue our journey through the volatile landscapes of economics. How to protect your finances from inflation. As inflation continues its inevitable march, it's crucial to shield your finances from its potentially erosive effects. Imagine inflation as a pesky, relentless foe in the battle for financial wellness. To counter this adversary, you need the right weapons in your arsenal, and your choice of investments is your first line of defense. Stepping into the realm of real estate can be an effective strategy to combat inflation. Properties over time often appreciate in value and can provide a solid buffer against the rising tide of prices. Similarly, commodities such as gold, oil, or even agricultural products historically stand their ground when inflation rears its head, offering a potential refuge for your money. Adding another feather to your investment cap, consider Treasury inflation-protected securities. These are US government-issued bonds that automatically adjust with inflation. When inflation hikes up, so does the value of your TIPS. It's a bit like having an automatic inflation-fighting superpower in your portfolio. Another effective tactic to stay ahead in the inflation game is to focus on increasing your income. If you've been performing well at your job, it might be time to negotiate a raise. Alternatively, if you've been itching for a career change, a higher-paying job could be your ticket to outpacing inflation. You could also channel your entrepreneurial spirit into a side hustle to boost your income stream. Remember, every additional dollar you earn is a step forward in your race against inflation. Lastly, never underestimate the power of diversification. Spreading your investments across various assets is akin to putting multiple shields up against inflation, increasing your chances of safeguarding your wealth. Remember, staying financially fit in an inflationary environment is much like sailing through a storm. Equip your financial vessel with the right tools, stay vigilant, and you'll navigate through the inflationary waves with confidence and skill. Onward, financial warriors, your financial future awaits. If you enjoyed from this video, don't forget to like and subscribe to our channel. Thanks for watching.